The BOJ have just sent shockwaves through the foreign exchange markets with one of their biggest interventions in history. 5.4 trillion yen, bigger than any of the interventions in 2024 and equal to the largest intervention back in 2022, which came in October. And if we take a closer look, you can see that every 2 years, the Bank of Japan intervenes, usually twice, and this pushes US dollar yen down for around 3 months before the US dollar yen pair recovers. And with the latest intervention only days old, Goldman Sachs are talking about rebuilding their US dollar long position, highlighting the fact that we are probably going to see another round of intervention in the Japanese yen fairly soon. So for those of you watching the video for the first time, my name is John Fortune. I've been trading financial markets for over 18 years. And in today's video, I'm going to share with you my exact trading plan for next week, including the key buy and sell zones in multiple currency pairs. And I'm also going to be looking at the Japanese yen to the long side versus multiple currencies as one of my top themes heading into next week. Okay, so let's pull up the US dollar index, because as Japan bought Japanese yen, they sold US dollars. And this has had a significant impact on the US dollar index. And as we can see going into next week, yes, we are at this tight range at the trend line low going all the way back to the great financial crisis in the dollar. And I suspect the US dollar yen is most likely going to break this range to the upside. But specifically heading into next week, in terms of short-term opportunities, I am going to be looking for US dollar shorts. Now, when we go through the portfolio selection and look at the strongest versus weakest currencies going into next week, you will see that the US dollar is one of the top short themes, and we are going to look at a number of US dollar short setups heading into next week. But purely in terms of the technicals, now we've bounced off the 100.257, it does look like we're making an attempt back down to the range low at the 96.37. And as it currently stands here in the 4-hour time horizon, you can see we've got this weekly engulfing candle, and we've broken down below the prior low, and we're consolidating underneath the prior low. So this tends to set up a kind of bear flag setup. And very often when you get an engulfing week like this, the market is at risk of significant follow through, in this case to the downside. So it may be the case that we do get a push higher. Perhaps we even come back and retest the underside over here. But I am on balance going to be looking to short the US dollar versus some of the other currencies, especially the stronger ones heading into next week, like the Australian dollar, which is actually one of my top long themes for next week. Okay, so let's have a look at the portfolio selection heading into next week before we run through the US dollar pairs. And the Australian dollar is my #1 long theme. So outside of the US dollar pairs, we'll look at some top Aussie long setups for next week. We're also seeing the Canadian dollar to the long side, which is setting up nicely, and the pound as well. So those are the top 3 currencies going into next week. And to the short side, we have the US dollar, which is also suffering from the intervention from the Bank of Japan last week. We have the New Zealand dollar, and we have the euro to the downside. So those are the 3 currencies we're primarily going to be looking at to the short side in today's video, and looking specifically at setups which involve shorting those 3 currencies. But we also, going into next week, have the Japanese yen. Now, yes, we could look at some pound setups to the long side, and perhaps we'll look at a couple of pound setups heading into next week. But the third currency, based on what we looked at last week, is going to be the Japanese yen to the long side for me. So we're going to primarily be looking at the Aussie, the CAD, and the Japanese yen to the long side, versus the US dollar, the New Zealand dollar, and also the euro to the downside. And we are, of course, in a brand new trading month, which is great because last month was a little bit of a slow month for foreign exchange. However, post BOC and FOMC last week, we have a ton of opportunities setting up in foreign exchange markets next week. So let's move on to the US dollar pairs. And don't forget, guys, if you enjoy these videos or you feel you get any value at all out of them, be sure to like, share, and especially to subscribe. And if you're on a mobile device, you can hype the video as well. It really helps the channel when you do that. And a big thank you to all of you who do that on a regular basis and who are subscribed to the channel so far. Okay, so let's kick off the dollar pairs with euro dollar then, because I do see a good opportunity in euro dollar next week, and I'm going to show you exactly where that is. But what we're looking at here is we're in hedge dash, and we're looking at the quantitative buy and sell zones. So you can see here, for example, the buy zone next week is below the 1.16217. And this is where quantitatively next week we turn oversold. So if we trade into this zone, we're oversold during the week. And if we trade into this zone, we're overbought during the week. And of course, if you have neutral markets, you can kind of trade, from the buy zone or the sell zone because you expect the market to range. And if you have a strong market, then we're only buying in the buy zone. And if you have a weak market, we're really only looking to sell in the sell zone. And again, none of this is theory, guys. This is what we do day in and day out, every single day with members in real time. And we're now approaching over 1,000 setups sent out to members. And we have a 75% win rate using this exact process that we're going to be looking at in today's video. So when we're looking at euro dollar, you can see we are crisscrossing the moving average. So we are in a ranging environment here in the daily time horizon. And this is what we would call a range reversal play. For those of you who have downloaded the free strategy guide below, you will know that euro dollar is a pair which has the euro and the US dollar, which are both weak heading into next week. And therefore we would anticipate this market to continue to range. So we can trade two weak currencies against each other because they should hold their range. Both of these currencies are suffering from the BOJ intervention. But on balance, I would prefer to look for buying opportunities in euro dollar below the 1.162117. So if we get into the buy zone for 1 or 2 days next week, I'm going to be looking to buy euro dollar. Let's have a look at the multi-charts to see where we can get some nice confluence for support. So if you pull up the multi-charts here, you can see the buy zone is this light blue level here. And just below this, we have a really nice daily support level over here. And this actually almost sets up a little bit of an inverse head and shoulders play here, because this is the low from 1, 2, 3, 4 months ago. So what I'm going to be looking at in euro dollar, and you can see we're kind of in a range in the monthly, we're stuck in a range in the weekly, we're kind of bouncing off the 50 period moving average, we're crisscrossing the 50 period moving average in the 4 hours. This is a market which is ranging. Why? Because both the euro and the dollar are weak, and these two currencies can't find any direction against each other because they're both weak. So any trade into the buy zone next week, and I'm going to be specifically looking for a test of the 1.15765. This is where I'm going to be looking for a bounce back towards the 20 period moving average in the daily time horizon. I'm going to be looking for a 1 or 2 day reversal from that area next week in euro dollar. GbpUsd, this is a market I only want to be a buyer of. We just looked at this in the portfolio selection. The pound is actually, arguably the third best long currency heading into next week. I only really like the yen because we've just come fresh off that intervention, but the pound is a long for me next week against other weaker currencies. So what I'd like to see next week is for pound dollar to come into the buy zone. Now, don't worry about this. This is just a price spike here in the quantitative data. This is not something that you will see in your brokerage or anything like that. And we'll see that when we go to the multi-charts. But I'd like to see pound dollar coming down into the buy zone, which starts at the 1.34481. And this is where I'm going to be looking to buy the dip in pound dollar. What I like about this is we have a really nice daily support just here that we can time any kind of range play from. Look at how the moving average is in the middle of the range. We come back down below it, and you can see quite clearly there's a range setting up here. So looking to buy pound dollar from the range low in the buy zone next week for 1 or 2 days upside. And if we have a quick look at the multi-charts here, what I like about this is we're also going to be pulling back into the 50 period daily moving average if we can do that. So once you kind of cross over the moving average and start to pull back into it, this actually provides dynamic support as well. So now we have horizontal support, we have volatility support because we looked at this entering the buy zone right here at this blue level. And we have dynamic support in the daily moving averages. So this really is setting up for at least a 4-star setup heading into next week if we can pull back into this area. That is specifically where I'm going to be looking to buy pound dollar next week for a 1 or 2 day bounce. UsdJpy, now this is the intervention we saw at the end of last week. There was actually a buy the dip opportunity. It turned oversold on a rolling daily basis, and with roughly a 70% expectancy, we should start to see this pausing or reversing, at least just for a 1 or 2 day bounce within the next couple of days. We did get that, but I didn't take that trade because I was a little bit nervous that this would continue going down. The risk was just a little bit too high for me to actually step in and buy the dip on that. However, you can see here that we are pulling away from the moving average, and the moving average is now sitting at the sell zone. So you'll notice in a number of these markets, the moving average is roughly in the middle of the range. That's how you know that pair is ranging and it's neutral. And you can see with the moving average sitting at the sell zone, this actually shows momentum. This turns into a sell the rip opportunity. So any move above the 158.89 roughly, I'm going to be looking at an opportunity to sell US dollar yen next week. It's not going to come all the way down here, but I'll be looking for a 1 or 2 day bounce in this area like this. And if we pull up the multi-charts, you can see big engulfing candle to the downside. So even if we just pull back into the sell zone, and what I like here is we have a really nice low. Look at this low here. We broke through this with momentum. We're coming back and retesting the underside of this. This is also going to be right where the sell zone starts. So I'll be looking for 1 or 2 days, but we could potentially swing trade back down at least to the prior weekly low. Now, for those of you who watched last week's video, you'll know, and in fact, in the last few weeks, I've been really pointing out the fact that the Japanese yen is on the verge of a major capitulation and sell-off. And I said in last week's video, if they don't do something this week, and also, in coordination most likely with the US Treasury, they are going to see the Japanese yen really liquidating and selling off, because technically it was right on the brink. And I highlighted the 159.86 as the breakout level. And look at how we broke through and we started to pull away. And as we started to pull away, the strength of this move to the upside and the testing of the 160.72 roughly, and actually this prior high here, that initiated that BOJ intervention. And we saw the bigger liquidation as all of the buyers who were looking to step in potentially, or even booking profits from lower areas here, liquidated their position on the news that the BOJ had intervened. So going into next week, I am looking for this pullback into this area, preferably a test of this low, which sits just inside the sell zone, for a 1 or 2 day reversal. I do think we could see this come back down, maybe even test the 50 period moving average in the weekly, but I suspect we're going to end up potentially even coming back to new highs, potentially testing this high, and then I think we're probably going to end up with a second round of intervention from the BOJ, and then we'll probably see 3 to 4 months downside in this pair. But for right now, short term, I'm looking for a 1 or 2 day reversal from the 158.89 area. USD, CAD, this is a market that I'm only looking to be short next week. You can see we are trending down again. Look at the moving average sitting in the sell zone. That's a giveaway that we have momentum to the downside. We should really be looking for a kind of rip higher and then the opportunity to sell the rip. So I am going to be looking for US dollar CAD to trade above the 1.3672 roughly next week. That's where I'm going to be looking for a short for 1 or 2 days. And there's a really nice descending trend line here, which we're going to look at now in the multi-charts. So when I pull up the multi-charts, look at this really nice descending trend line from this high to this high in the 4 hours. This is actually a 1 hour head and shoulders that you can see I've got here, comes down, test the right shoulder, and then we get the sell off. So if we can pull back into this area, we've broken below the prior low, but it doesn't mean we can't pull back. If we pull back into this area, you can see the sell zone starts at the 1.3672, and just above the sell zone next week, we run right into that descending channel in the 4 hour time horizon. So that is specifically where I'm going to be looking for a 1 or 2 day reversal to the downside in US dollar CAD next week. You can also see right in this area is the 50 moving average in the 4 hour time horizon, which every time price pulls back to this, we tend to get a rejection from it. So really nice area here to look for a 1 or 2 day short at the 1.36722. Next is US dollar Swiss franc. Now on balance, I am looking to be a seller in this market. We are kind of selling off and making new lows over here in this leg. However, generally speaking, look at the moving average. We are ranging, and we looked at this in the portfolio selection. The US dollar and the Swiss franc are both kind of weak to neutral. The dollar's kind of weak to neutral and the franc is neutral. So I would prefer to look for shorts. I personally need to see US dollar franc entering the sell zone next week above the 0.78958. And if we can take out this daily resistance, this is where I'll be looking to time a 1 or 2 day reversal back towards the middle of the range next week. So a couple of things I want to show you on the multi-charts here for why I prefer US dollar Swiss franc to the downside as well next week is look at this reversal week. And the risk here is clearly to the downside. We are actually down below the 9 EMA on the monthly. We actually bounced off it, closed lower. So there is every chance we see further declines in US dollar Swiss franc. We had this double top over here. You could look for this to pull back, into the moving averages and the next leg down. A break of the weekly low is where we could really start to see some liquidation to the downside. But in terms of mean reversion, which is what I primarily trade, I'd be looking for a trade above the 0.78958 and preferably into last week's high, because I do think if we test last week's high, there's a very low probability of an explosive move to the upside. I think at the very least, we would end up rolling back down towards the middle of the range here. So that's what I'm looking at in US dollar Swiss franc. It's not the best setup. I think there are better markets to trade next week. NzdUsd. Now I like this market to the upside on balance. Again, these are two of the currencies that I'm primarily looking to be short. And so I would anticipate them holding their range. But when we look at the multi-charts in a little bit more detail, you'll see why I actually favor long opportunities heading into next week. And again, don't worry about this. This is just a little bit of a data spike here that can be cleaned up. But there is a nice key area of support right here in the daily time horizon. The moving average, you can see it sits right in the middle of the volatility range. So this is a market which is ranging. Again, shouldn't surprise us because both of these are actually two of the better shorts heading into next week. So if we jump over to the multi-charts, you can see why I prefer New Zealand dollar to the upside, because if you look at this, we closed last month higher and we closed last week higher. So any kind of pullback into this area, I would anticipate this market at least bouncing for 1 or 2 days, probably back inside this range. You can see how the 50-period EMA here is just kind of flat. And so I would prefer to buy dips from the low, especially if we come down, take out last week's low. This was a pretty big reversal week. It was an engulfing week. So if we do come down and take out the low, we're right at the top of last week. Last week was a pretty big week. I mean, if we take out this low, it seems unlikely that we're going to significantly break lower because we've already got a big week here. It means we would have had a big move down to test this low. And neither of these currencies, the US dollar is not particularly strong. And we had an up close last month, which we would have to reverse all the way down. So on balance, a test of this low over here in the buy zone is something I'd be interested in at least looking at next week. Again, I think there are better opportunities, and Aussie dollar to the upside is one of those, which we're going to look at next. But that is what I see in New Zealand dollar, and that is where I'll start to get interested for a potential 1 or 2 day bounce to the upside if we can trade into the buy zone and into last week's low. And the final dollar pair before we move on to Bitcoin and Ethereum, we will look at gold and silver at the end of the video as well. But the final pair here is Aussie dollar. This is the #1 long theme heading into next week. And what I like about this is the range low sits right at the buy zone next week, which is 0.7112. So what I'd like to see is I'd like to see this coming back down, crisscrossing the moving average and testing the range low. We're actually inside a daily range here. And as you can see, bounced over here, back up to the top of the range, bounced over here, back up to the top of the range. I won't necessarily be looking for a move back to the top of the range, but I will be looking for a bounce at least for 1 or 2 days back towards the moving average. And that is, in my opinion, a better setup than New Zealand dollar to the upside next week. And again, if we look at this on the multi-charts, you can see this is simply pulling back into the daily moving averages and the key area of support over here. Over here, this is where we bounced from last week. So any kind of pullback, and I do anticipate this range breaking out to the upside at some point. But it's an if-then process. If we get Aussie dollar turning oversold next week below the 0.71120, then I will look for a 1 or 2 day bounce higher on the anticipation that this range low should hold, because the Aussie is a significantly stronger currency next week than the US dollar. So even if the US dollar manages to strengthen against it and push the Aussie down, I would view that as a mispricing, and I would look to take the other side of that on the basis that a bigger breakout directionally to the downside is unlikely, especially if we don't have any kind of US dollar bullish catalyst coming into markets. Next is Bitcoin. Now, Bitcoin is kind of in a bit of a range. We've been looking at this in the weekly time horizon, how it's forming another bear flag, just like it did over here. And going into next week with a bearish bias more or less in the dollar, I do think Ethereum, Bitcoin could probably push a bit higher. And here's what I see in Bitcoin. We highlighted the inside month. So looking for the high and the low of the month as the breakout levels. I'm not overly impressed with what I'm seeing here. We broke above it, we kind of pulled back, we broke above it, and we kind of pulled back. So why am I not very impressed by that? Well, this inside month is showing a real contraction of volatility. And if you're going to get a reversal, we should see this start to really explode above the high of the inside month. Now, what we're seeing here instead is we're seeing this kind of pushing up, selling off, pushing up, selling off. And this tells me overall that the market is still looking at this as a corrective wave, not as a reversal or a new impulse wave to the upside. So you sell off, you have a consolidation, and then you get a reversal impulse wave up. Instead, it's choppy in nature. It's corrective in nature. Every time it pushes up, new sellers step in. And that really is indicative. It's characteristic of a pullback or a corrective wave. So I do think we're probably heading a little bit higher in Bitcoin. We are now chopping around the moving average, the 50-period moving average here. We closed above the 20 EMA, and we're very, very close to this weekly low. So we had a bear flag, we broke the low, and now we're flagging back into the low. So I think Bitcoin probably does come up to the prior low, which is right up here at the 80,559. But above and beyond that, I do think Bitcoin could start to stall out, and we could very easily start the next leg down, a kind of stair step from here, and a move back down towards the bear flag low, because this is still a big bear flag in the weekly time horizon. And as we're going to see now, Ethereum is even weaker than Bitcoin and also kind of pointing to further downside fairly soon. So if we have a look at Ethereum, why is Ethereum weaker than Bitcoin? Because we actually closed inside the inside month last week. You can see we had this push up, we tested the prior month's high, which was an inside month, and then we closed back inside. This is pretty bearish. I mean, we've got a wick on the month before, and then last month we have another wick to the downside. That is in a monthly time horizon, you know, big kind of elongated candles with small body candles with wicks to the upside. That's pretty bearish, guys. And it tells me that this is likely to fail in and around this area. We're already in this kind of range consolidation. So what I would need to see is if you are going to start to look for the next leg down, look for this range here to fail. It would need to be a break below the moving average in the daily. And as that materializes, you know, that would be where you could look for pullbacks towards the 50-period moving average and the 20-period moving average and moves away. And there's a very good chance, again, we come down to the bear flag low, at least, which is roughly 1750. But there's nothing to say we couldn't actually start to push down lower and even take out the prior low down here roughly at the 1250. So I am bearish on Ethereum. If you wanted to buy, you know, any one short term, it would be Bitcoin over Ethereum because it's actually stronger relatively speaking. And once we start to get breakdowns in these markets, it would be Ethereum based on this kind of price action, what I'm seeing here, that I would prefer to look for shorts in, as I do think that this is likely to underperform Bitcoin when both Bitcoin and Ethereum do start to continue their next legs down. Okay, so let's look at some of the top non-US dollar pairs setting up next week. Now, Aussie New Zealand, of course, from portfolio selection is something I'm looking to be long. And again, if then process, if we can pull back into the buy zone and turn oversold, so if we can turn oversold in a market I'm looking to be long, that's an opportunity. That's where you get real edge to look to step in. In this case, I would be looking to time a long opportunity from below the prior low at the 1.2103. So if we jump over to the multi-charts, you can see the buy zone starts right here, and this is the low. So it's the 2-week low here, 1, 2, that I'd be looking for the market turnover sold. And that's where I'd be looking to step in and buy the dip. You can see trending to the upside in the monthly and the weekly. And this is a very, very strong market as it currently stands. So any pullback into this area, I am going to be looking for a 1 or 2 day bounce back towards the 50-period moving average in Aussie New Zealand. Next is EurAusd. Now looking only to be a seller of this market given the opportunity. This is a short or do nothing. And the euro is a weaker currency, the Aussie is a stronger currency. And again, look at the moving average sitting right at the top of the sell zone here, showing this momentum we've got. So any pullback into this area, a rip higher into the moving average, into the sell zone above the 1.6406. This is the daily high that I'm going to be looking to time a 1 or 2 day short from in EurAusd. And again, look how nice this setup would be. We've got this potential mini double bottom. So if we do start to see this breaking out and pushing back above the 50-period moving average, this would turn into a range, but it would turn into a range in a downtrend. So I'd be looking to short the top of the range in the downtrend. I would personally be looking for 1 or 2 days. You could probably swing trade, you know, back down to the prior lows. I do think in the weekly time horizon, we're coming down to here. So I have a lot of confidence if we do get any kind of pullback in this area, pulling the trigger on a short opportunity is going to be a good idea in EurAusd next week if we can get that price action. So again, if we can get it, then I'll pull the trigger. If we don't get it, I'll probably sit it out. AUD, CHF, this is a market which I would like to be a buyer of given the opportunity. And this is, you know, a strong currency versus a kind of neutral currency. So looking to buy the dip from the buy zone. The buy zone starts at 0.5576 roughly. And this is where I'd be looking for this to come down turn oversold during the week, and there's a really nice daily support level here. So now we've got portfolio selection, we've got a pullback, a range trading opportunity in a market that should overall be making its way higher. And we have a really nice key area of support to time any long opportunities from. So if we jump over to the multi-charts, what I really like about this is, look at how we've got the buy zone and that key area of support sitting right here. It would also be a potential bounce from the 50-period moving average in the daily time horizon. But look at this over here. This is a prior descending triangle low in the monthly. And this was the low right here. And that low sits right at this key area of support here as well. So this was where we had the descending triangle level breaking down here. It all congregates around the 0.55587. So any pullback into this area next week, that is where I'm going to be looking, specifically from this low, because I suspect the moving average will catch up with it. But that's where I'm going to be looking for a 1 or 2 day bounce to the upside in Aussie franc next week. NzdJpy, this is a market I can only be short next week. I really like the fact we have a significant daily range high, which we've held, and now that sits right at the top of the sell zone heading into next week. It's a neutral market in a range. If we can pull back and retest the 93.88 top of the range, this is where I'm going to once again be looking for a 1 or 2 day reversal to the downside in this market. Again, in the multi-charts, you can see this is that really nice range high right here. So we're crisscrossing the 50-period EMA in the daily time horizon. Any kind of pullback here, we've got this double top, which we've just broken down, completed the double top, and now we're getting a bounce back. So any move up into this area, you can see it a bit more clearly on the 4-hour time horizon. The 93.86 sits, which sits just above the sell zone next week. This is the specific level, the 93.866, I'm going to be looking to time a potential short opportunity to the downside for roughly 1 or 2 days in New Zealand yen next week if we can get there. Euro yen, this is a short or nothing for me next week. What I really like about this is we had this consolidation and we've got this prior low where we stair-stepped the high. And then we broke through it on the liquidation. So I'm looking for a pullback into this area. It's a rip and flip setup because the moving average is over here in the sell zone. And I'm going to be looking for a rejection at least for 1 or 2 days. But again, this could end up being a bigger swing trade back down to the lows. But my mandate short-term process is to capture 1 to 2 days worth of volatility. That's what we're doing every single day, week in and week out with members. And now if we look at the multi-charts, what's super interesting is look at this monthly candle. So this was a really big bull flag setting up. We broke the high, then we got the intervention. And what the BOJ have done is they've painted this wick right at the end of the month. So now traders are looking at this monthly candle and they're thinking, like I am, if the low of this month breaks, we are potentially setting up for a strong liquidation down. So this also is why the Bank of Japan could very easily intervene once again, as it has done historically, because the first time kind of paints the wick on this candle and the second one pushes it through the monthly low, and that actually can cause serious liquidation to the downside, because especially bigger players, they usually will trade using monthly time horizons and they're going to be trailing stops, down below monthly lows. And when you get this kind of wick on a monthly candle, many of them will pull their stops all the way up to here to say, this looks like this is probably going to roll over, so we better move our stop losses up. And that's when all that liquidation comes in, and they all pull their positions if it goes through. So I would prefer for now to be on the short side of these. Any kind of pullback into the sell zone. We do have the weekly low over here, and also this sits right at, you can see, the prior breakout low, this kind of descending triangle low. So that's where I'm going to be looking for a 1 or 2 day reversal to the downside next week, right at this low here. And also we have this nice high right here at the same area. Next is pound yen. Now the pound is kind of a market that I'm looking to be long versus other currencies, generally speaking, but a couple of people have been asking for it recently, and I do think that this is probably still a decent short next week given the opportunity. You can see that the sell zone starts up at the 215.38, and we have the left shoulder in the daily time horizon just above it. So there's a number of really nice key areas of resistance in here that if we can pull back into this area, this is where I'd be looking for this to kind of hold this range for a 1 or 2 day reversal to the downside next week. And on the multi-charts, you can see we were coming up for the 219 price target for this ascending triangle before we got that intervention. And now, you know, we kind of have this secondary failed ascending triangle over here. And I would be looking for a move back down towards, you know, last week's low and, you know, the kind of bottom of this ascending triangle pattern in the weekly. And we could very easily see that start to play out in the same way, where we come back down, then we recover, take out the monthly ascending triangle target, and then we get a second intervention, and then we get that kind of 3 month to 4 month decline, as we've seen kind of every 2 years since 2022. So that's what I see in pound yen. Any pullback above the 215.38. You can also see we have a really nice daily candle low right here, and this is also somewhere you can time a potential reversal from on a short-term basis. And the final forex pair before we move on to gold and silver is euro franc. Now this was a market, and you can see two kind of weaker currencies against each other, should more or less hold their range or chop around, but this was a market that we bought successfully last week in the real-time setups with members, but it moved very, very quickly. I mean, I don't remember the last time an opportunity worked this quickly, kind of almost immediately after I got involved. It ripped into the target and then it just kind of sat there. This is actually a Monday, Tuesday reversal play, but let me draw your attention to the multi-charts in a second to show you why I think it's better to wait for the short setup rather than the Monday, Tuesday reversal bounce, just in case we end up getting a bigger sell-off without a Monday, Tuesday reversal, because Monday, Tuesday reversals happen most of the time, but not all of the time. And in this case, we've just had a weaker monthly close. And you can see the problem here is we've got this big sell-off, and this month is actually a very small monthly candle. And when you have narrow ranges in the monthly time horizon, they can be followed by more kind of extended months or bigger months. So I would be a little bit wary about stepping in now anywhere near this monthly low. Now the month has closed. And you can see here we have this really nice engulfing candle in the weekly. What I really like about this setup next week is we have a big bear flag in the 4-hour time horizon, and any kind of pullback into the sell zone, there's your double top right there, any kind of pullback into the sell zone is also right at the 2-week high right here. So we get that really nice head and shoulders setup. So this is where I'm going to be looking to time a 1 or 2 day reversal to the downside in euro franc next week if we can get there. Crude oil, now this is still really a buy or do nothing for me. However, Japan have just come out and said that they are prepared to intervene in the crude oil market if necessary. In other words, to push the price of crude oil down. And don't forget, when we saw the yen intervention, we also saw simultaneously a big sell-off in crude oil, suggesting either Japan or perhaps the US had intervened in the oil market to push it lower, just as the Japanese were intervening in the currency in order to make the intervention more effective. So I am still bullish on crude oil. We had the double bottom in the monthly, which we took out the target at the 102.55, and we actually kind of stopped right there. And now we've seen consolidation. We are breaking out in the daily. We had this daily bull flag, which we're breaking out of. So what I'd be looking for here in crude oil is I'd be looking for this counter trend break. Now we've tested the 50 period moving average, and look for price to push up and reclaim both the 9 and the 20 period moving average and then nestle into it. That's the kind of first move away from the moving averages that I would be looking for. And I think there's a pretty good chance that we take out at least the inside month high. And because it's an inside month in crude oil, we could really start to accelerate through the high. And of course, that would be the start of the next leg up, potentially up to this area here. But again, the issue is you could actually have further intervention in this if you are long. So I would suggest any long positions are kind of short-lived and try to be in and out, you know, within at least a couple of days if possible. Because if you don't, you could be on the wrong side of an intervention in crude oil, just as some people were on the wrong side of intervention in the Japanese yen last week. Okay, so wrapping up the video with gold and silver, starting with gold. Now, I have a bearish bias in the dollar, especially because of what's just happened with the Japanese yen, but also because that's how the portfolio selection is setting up. But look at the month previous that we've just finished. It's an inside month, it's super tight. So what I'd be looking for is I would be looking for the breakout first, because within this kind of consolidation, if you try and range trade this tight market, now the month has closed, you could very easily see a bigger breakout month. And if you try and range trade it and you're on the wrong side of it, of course, that's not going to be great. So what I'd be looking for personally is, a breakout of the inside month high or low, but based on the monthly time horizon, you can see we are actually still above the 9 EMA. So any kind of break of this, I would actually look for a kind of near-term target of the prior month's high. So any break above the 4889, and you want to see it break with momentum and then consolidate above it. You don't want to just see it wicket like this because it could go into a bigger range. So you want to see it break with momentum and then consolidate above it. And the next leg up, that second follow through leg into this monthly high over here, that's the kind of setup I'd be looking for next in gold. And to the short side, if you just wanted to be reactive rather than predictive, of course, we have had multiple closes down below the 20 period EMA in the weekly time horizon. This tends to suggest we're heading back towards the 50 EMA at some point. So if you do get the breakout to the downside next week, I would again just be looking for the opposite. If you have a narrow range, you get the breakout either way. It doesn't really matter, to be honest with you, if it breaks out higher or lower. You just wait for the breakout, and then I'd be looking for the move down to the prior monthly low. But also, you can see this is right near the 50 period moving average in the weekly, which is roughly the 4,200 level. And exactly the same setup has materialized in silver. In fact, this is more of a narrow range. It's even tighter by the looks of it than gold. So, a breakout to the upside would be my preference, because we've just looked at the fact the US dollar is one of the better shorts heading into next week. And that does, provide a tailwind for gold and silver. And so any break above the 83.03, that would be the breakout opportunity. You could target the next monthly high up here, just under the kind of, roughly at the 90 level. And in silver, we're still in this range that we've been highlighting for multiple weeks now, between the 92.192 and the 64.017. So I think the setup in silver is very straightforward. If we break the 83.03, I'd be looking for the range high up at the 92.19. And if then process, we break the 69.78 and we start to flag underneath it, I would be looking down towards the 50 period moving average in the weekly, which is currently at the 62.17 roughly. And again, that would actually be the kind of 1-2 month, instead of high, the 2 month low as a target of this kind of inside month breakout. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.